Hi, my name is Johan Giliomee, and I'm one of the B Strategy Specialists at Alternative Prosperity. I'm going to tell you a bit more about becoming a 51% Black-owned business, why it is such a big deal, and what to look out for if you're going through this process. You may be considering taking up your company through this process, but are not quite yet convinced that this big step will really create value for your business and open up new opportunities. And maybe you still need to know a lot more about the process and what it really involves. So let's start with what the real definition of 51% Black-owned is. All right, so if we have a quick look at the criteria for 51% Black ownership, you will find that there are three basic tick boxes that a company has to comply with before they can call themselves 51% Black-owned. The first being that at least 51% of exercisable voting rights must be in the hands of Black people. Voting rights meaning a voting right attached to an equity instrument which is owned or held for a participant. The second part is at least 51% of economic interest must be held by Black people. The definition of economic interest being a claim against an entity representing a return on ownership to a dividend right. And then the third one, which is a little bit more complex, relates to net value. What is the real net value that the Black shareholders hold? And in terms of this tick box, the company has to achieve all points for net value. Now, on the generic scorecard, this would mean 8 points, which is one of the subsections there. And unfortunately, it is a bit of a complicated calculation, which we cannot discuss now, but in simplified terms, relates to the value of the Black shares, which is then compared to the value of the Black debt, which is held in relation to those shares. And this is then measured over a certain time frame. And if the debt to equity ratio remains within the specified criteria, then the full points will be achieved from year to year. So basically, a company needs to tick all three of these boxes before it can call itself a 51% Black-owned entity, and missing it on one of these means that you do not comply to that criteria. All right, so if we ask the question, so why is it such a big deal to be 51% Black-owned? We have to look at two parts to this question. And the first part starting with the preferential procurement element on the scorecard. Now, what you're seeing here is the typical preferential procurement scorecard of a generic client of yours. And you'll see there's 27 plus 2 points. So a significant weighting on the overall scorecard. And this is what they will be looking at and saying, where on the scorecard can I improve my score? And if we run down these categories very quickly, you'll see the first category is procurement from all suppliers, 5 points with a target of 80%. Then the next two categories are aimed at smaller enterprises, suppliers, QSEs, meaning a turnover of below 50 million, 3 points. EMEs, exempted micro enterprises, 4 points for procurement from suppliers with a turnover of less than 10 million rand. And then the big item here is, as you can see, 11 points for procurement from suppliers that are more than 51% Black-owned. Also a big target of 50%. And then below that, 4 points for procurement from 3% Black women-owned suppliers. So you can clearly see very soon your clients will realize, if I want to improve my score, the quickest way to get the score moving is to target those 11 points. The preferential procurement scorecard is a priority element, which means that companies need to score at least 40% of those 27 points to avoid being discounted by a whole B level. So they take this element seriously, and they will try to optimize it. And also keep in mind that if you are then a 51% Black-owned supplier and you also qualify according to other categories, there will be some double counting here, which will have a bigger benefit for your client. So using an example, if we take, for example, a 51% Black-owned supplier will assist with those first 5 points under all procurement. You will likely have a reasonably good B level. If you are a QSE supplier, you will assist this client of yours with the next category, the 3 points. And of course, you will make a contribution towards those 11 points. If you also manage to achieve a 30% Black women-owned shareholding, then you will assist this client in a fourth category. So clearly you can see that these type of suppliers have become very valuable. Clients will look out for them, and they will either, if it's an existing supplier of theirs, increase procurement or possibly switch to a 51% Black-owned supplier at the cost of a non-Black-owned supplier. So on the positive side, you could possibly get access to a whole new market. If you've been a small supplier, your procurement could drastically improve from new orders coming in. Many government tenders require 51% Black ownership, and this could be an opportunity for you to get access to a whole new public sector procurement chain, which could help to grow your business. On the downside, if you are an existing big supplier to a client and you're not 51% Black owned, and you choose not to remain so, the mounting pressure on this client of yours could in the end result this client looking around and saying, hang on, I need to improve my score, and maybe I should switch to other suppliers that have taken the step to become 51% Black-owned. So there's a downside of the risk of losing business as well. The second part of why it has become such a big deal to be a 51% Black-owned company has to do with the fact that it could save your company a lot of effort and cost in terms of BEE compliance requirements. So if you are a 51% Black-owned EME or QSE, as we saw earlier, you are effectively exempted completely from undergoing a full verification, and you will qualify automatically as a level 2 compliant BEE entity. That is, if you have at least 51% Black ownership, and if you can achieve 100% Black ownership, you will qualify as a level 1. You then only need to provide a signed affidavit by yourself, as well as a stamp by a commissioner of oaths, which will serve as a valid BEE certificate, and which you can present to any transaction in terms of procurement requirements for BEE, and they have to accept that. And you do not have to go through a long verification process, and you can also, of course, also save all the costs that are associated with it. Just keep in mind as a last note that the calculation of your 51% Black ownership needs to be done on what they call the flow-through method. It simply means that it must be the real Black shareholding, the effective Black shareholding flowing down into your company. You are not allowed to use adjustments methods higher up, such as what they would call the modified flow-through principle, to arrive at your ownership. So then the next question is, how difficult is it to become a 51% Black-owned business, and what does this process involve? And the honest truth is it often takes a lot longer than people expect to do the transaction, and requires a lot of attention during the process. Alternative Prosperity will always advise our clients to take your time with such a big step. Do not make a rushed decision on transactions, as this could become very costly at a later stage when it all needs to be unwinded again. So this process will typically start with finding and finalizing the right partner or partners. Keep in mind that many transactions has more than one Black partner in the process, in the structure, and we often see that companies will get a Black individual in as a shareholder, combined with perhaps an employee share scheme, a broad-based ownership scheme, or a Black investment company. And then once you've finalized the partners, everyone involved needs to know what will be the price of this buy-in be, and for that you need a good, accurate valuation of the business. Once that is completed, it's important that the price is negotiated by all parties, and that everyone is happy at the end of the day that the price is reasonable for the new shareholders' buy-in into the company. Once the price is decided, you need to find finance. We find in most cases that new Black shareholders require some form of finance, either from a commercial bank or another funding type institution. And this could take a lot of time, especially the banks have got a lot of hurdles and due diligences that they will require. So this process, do not expect this process to be very quick. once the deal is finalized, you need to make sure that all the B boxes are ticked to make sure that you will, at the end of the day, once implemented, achieve all the B points and the B status of being 51% Black owned at the end of the day. Importantly, the new shareholders, together with the existing shareholders of the company, needs to be aligned as to what will everyone's new responsibilities be. Some of the new shareholders could be non-executive, some could be executive, which means that they're going to be involved in the day-to-day operations of the company, and it's critical that everyone understands who will be doing what in the new structure. And then, of course, once everything is finalized, the paperwork is important. It needs to be sorted out and worked through and reviewed. These agreements often take also longer than expected, but that is a critical part of getting the deal properly done and so that it remains intact. All right, so Alternative Prosperity assists with many in the facilitation process of many ownership transactions. And please feel free to call us. You have our details via our website, via our Cape Town and Johannesburg offices. We also provide a full range of transformation and B scorecard advisory and strategy services. So please feel free to contact us and also be on the lookout for other short, interesting videos that will be posted on our website shortly. Many thanks.